Hi, Tom Lydon here in Chicago at the Charles Schwab Impact Conference. I'm here with Eric Pollackov, Global Head of ETFs and Capital Markets at PowerShares. Great seeing you, Eric.
Yeah, great to see you.
So, smart beta is kind of the word of the year, strategic beta, whatever you want to call it.
Yep.
But a lot of folks are jumping into it now as far as offering product.
Right.
PowerShares has been at this for over a decade.
That's right. So, when we think about the pool of assets, right, that our investors have access to, the whole smart beta, alternative beta, strategic beta, however you want to label it, is becoming much more prominent to investors, right?
Yeah.
And we see that with a lot of the active managers in the mutual fund space getting into the ETF space via the strategic beta or the smart beta venue. But when we look at our product set, we saw this over a decade ago, as you just mentioned. We have over 100 products in the smart beta space. And of those products, there's 60% of them have actually a 5-year track record. So we're not showing you back-tested data, we're showing you real live data, what has happened during the financial crisis, for example.
Right. And it's important because, listen, everyone's seen all the value of ETFs. We're seeing the flows have been just tremendous. We're seeing big active managers saying, okay, uncle, I can't take it anymore.
Right.
I need to get into the space, right?
Right.
But your point is, smart beta is great, but take it with a grain of salt because no one hates a back-tested ETF.
That's the whole point here. And listen, when we think about the financial crisis, for example, right? What happened during that time period from a sector perspective, right? Financials got killed, right? And then utilities were actually pretty strong during that time period. And some of the fundamental index, for example, rotated out of the more expensive stocks as they were getting clobbered, financials, for example. And then actually when March sort of the rebalance came back and the March of 09 took off, you saw where the fundamental indexing process worked really, really well. And that's where we started to overweight financials during that time period and underweight some of the more beat up stocks, so to speak.
So again, it's not an active strategy, but just because of the discipline with this fundamental balancing, it didn't own technology and financials at the top of the market before the financial crisis because they were so expensive that time.
That's right.
And then, but when it all rolled over and nobody knew how long that was going to be, at one point in time at the bottom of the market, these stocks are pretty darn cheap.
Yeah, and you saw exactly what happened in our U.S. fundamental product is where actually we started to scoop up, by rule, not by active management, but by rule, we started to take on a lot of those financials and it outperformed that index quite well, the S&P 500 quite well that year in 09.
Right. So as the number one concern advisors have today, because we survey them all the time, it's I'm worried about the market being long in the tooth, but I can't sell. I'm not going to exit the market, predict that it's going to go down.
That's right.
How do you stay in, but also know that if something like that were to ever happen, you have a defensive strategy?
Well, that's exactly right, and I think the fundamental indexing specifically really kind of dictates that, right? It underweights the overvalued and overweights the undervalued, and I think that's the perfect type of scenario that we're looking at for the past couple of years now when we have a market that's going straight in one direction.
Yeah. So Eric, before I let you go, give me one ticker symbol that has a long-term track record that advisors should consider.
So I would say PRF, which is based upon the FTSE RAFI US 1000, and I think that's really where it's one of the originals, and it's got a great track record to take a look at that's live and available for any type of advisor or consumer.
Excellent. As always, great seeing you.
Always a pleasure.
Thanks.